Stocks, real estate, crypto. Which one will make you wealthy? The wrong choice can cost you years of financial struggle, but the right choice can help you build a financial future. Welcome to Investment 101. My name is Nicholas. Today is day 25 of our 35-day wealth rescue series. It's an honor to have you here. And today we'll be taking a look at three important business portfolios. You will decide which one you will go for. We'll look at the pros and we'll look at the cons. If you are seeing this video for the first time, we want to appreciate you and we want you to do something for us. We want you to quickly go back, start from day one so that you can catch up with us. We also like you to subscribe. We want you to comment. We want you to share, and we want you to like. If you have been following us and you have not subscribed, what are you waiting for? Please subscribe, because your subscription, your comments, your like are the things that are helping us to come out with better quality trainings. We want to ensure that we give you the best because you deserve the best. Everyone wants to know, where should I put my money? In stock market, in real estate, in cryptocurrency? The truth is, no one single size fits all, and each comes with its own reward and its own risk. Let us simply break them down so that you know them, then you make your choice, the one that fits you the most. So let's start with the stock. We call it paper assets. Now, there are three basic advantages, three basic pros. The first one is accessibility. You can start with as low as $1 or even less than $1. You can go into fractional shares, or if you are in Nigeria, you can go into penny stock. So accessing the stock market is very, very easy as compared to the other two. Then you have liquidity. It is easily convertible. You can sell when you need money. Maybe there's an urgent need, you can go back to the stock market, place an order through your stockbroker, and it is sold. Then high yield. If you have left it for a long time, there is tendency that it will appreciate both in growth, and sometimes there can be additional stock allotted to you, and of course dividend. So you have accessibility, you have liquidity, and you have high yield. So here are the cons. We'll give you three. The first one is volatile. Market goes up, market comes down. There are downturns, and we have Mr. Correction that goes to regulate it. Then we talk of volume. It needs volume. If you want to do well in this portfolio, you must have volume. You can't compare someone who has just 10 to someone who has hundreds, who have thousands. Even if the stock is sold for $1,000 per unit, your ROI, your returns on investment, will be small as compared to someone who has hundreds and thousands of units. Then the third thing, we talk about discipline. The business is all about timing the market, not timing the market. Those who are profit takers, they hardly go home with much more, because the stockbroking firm will charge you when you are buying, and they will equally charge you when you are selling. So you must have enough time. For those who are not patient, that type of business may not suit well with them. So here is our take. It is for beginners. One, those who have limited capital and who are ready to build over time. Then it's also for those who want flexibility and those who are ready to stay the journey. It's about time in the market, not timing the market. Number two investment consideration is real estate. It is real, it is real. Number one advantage is that it is stable. Once you have it in America, it is in America. You have it in Nigeria, it is in Nigeria. You have it in Holland, it is in Holland. So it is stable. Number two, it is tangible. You can feel it, that this is an asset. This is my asset. Number three, profit, rental income. If you have a structure or you bought it having structures in it, you already start earning income. Then number three, it appreciates over time. Even if it's a war-torn zone, when the war is over, as soon as the war is over and peace, harmony is reestablished there, over time it jacks up. So that is the benefit. There is so much benefit in real estate. There is something called cashback. You don't want to miss such an investment. So if you are interested, you can send us a chat, we will reply you. So these are few of so many benefits in real estate. So we are going to consider now the cons of real estate. Then the cons of real estate, which is also known as tangible asset, is what? High capital investment. It requires high capital for you to go into such an investment, because you can't just buy a land or property with piecemeal. Then number two, liquidity challenge. The conversion from from that tangible assets into liquid. Maybe you are in desperate need of money, or there is a project, another project you want to embark on. You discover that it may take time, and if those that are bidding for it discover that you are in their need of money, they will price you less. So the tendency for you getting exactly the current market value may be defeated. So liquidity is always a challenge, especially if you are in desperate need of cash. Then maintenance cost. It's you have to maintain it, whether it's an existing property or a barren land. You have to maintain it. So these are the three major challenges with real estate. So our recommendation is for those who have steady, regular income. So you can go in. Those number two, those who have developed financial muscle, and those thirdly for those who want to explore other investment windows if they have not gone into real estate. Remember, I said there are other things that you can do in real estate that I mentioned earlier. So if you are interested, you can send us a chat and we will respond accordingly. So the third investment window we are considering today is crypto, which we also call the digital asset. Three major benefits. One, huge growth potential. The potential is massive. Two, globally recognized, whether in America, whether in Nigeria, whether in Burkina Faso, whether in Ghana, whether in Spain, it is recognized and accepted. Then high liquidity, it is easily converted. So it's not a case of somebody is trying to capitalize on your desperate need of money. No, you can convert therein and exactly at that particular point in time. So it is highly liquid. So here are some of the cons of crypto, the digital assets. Extremely volatile. That is number one. Number two, influenced by hype and by speculations. Here is our take. Bitcoin is for those who have the financial muscle, those who have the capacity to take risk, and those who want to diversify. If you have any of these three, or better still, if you have these three traits, then you are good to go. Now we are going to take a practical action on which of these three, how we should go about them. Which one should we take and which one should we drop? Or is it possible for us to take the three at a go? Let us show you. Here is the key. You do not need to choose just one. The smart move to do is to diversify. First and foremost, you start with stock for growth. Over time, you add real estate for stability. Then you diversify into crypto. However, I would recommend, if you are a beginner, if you are a fresher, if you must go into crypto, don't let it exceed 10% of your investment, of your portfolio, until you are grounded, you know it, until you are trained. Then you can launch out more. Otherwise, if you're a beginner, if you're a fresher, I will advise that you start crypto with at least not more than 10% of your portfolio. In closing, it is all up to you. What do you want? If you want low entry and steady growth, go for the stock market. If you want stability and long-term wealth, go for the real estate. If you want high profit, but remember with attendant risk, go for the crypto. But before you make any of this decision, which of the three you should go for, the question is, you must firstly define your investment goal. What do you really want? Peace of mind, stability, you want to grow your wealth, or you just want money? These three things, you can mix them. You can mix the three of them, as we have earlier said in the training, or better still, you can start with one. So you have to define your investment goal. What do you want? Peace of mind, you want stability, or you want money? Because there is so much that requires money. So you want money, so you decide. That will determine where you delve in. Or you can mix them, a composition of 60, 30, 10% of your investment spread across these three windows. So it is all up for you to decide. First and foremost, define your investment goal. Then when you define your investment goal, whether you want peace of mind, whether you want stability, whether you want gradual growth, whether you want quick money, then you can now know which one you can delve into. If today's training has added value to you, we want you to do something for us. We want you to subscribe. We want you to comment. We want you to like, and we want you to share. We shall be back here, the Lord willing, by tomorrow. God bless you. See you at the top. Remain at the top.